Hello, everyone. Today we'll be discussing my portfolio over the past week. We have a lot to get into, mainly with SOFI. SOFI was my biggest mover this week, and after that, we will review my Tesla earnings report, talk about part of my general investment theory. So let's get right into it. First of all, let's quickly go over my portfolio. The total value of my portfolio this week has increased by about $684. The biggest part of that is Vici. Vici increased their stock price by about 60 cents, which resulted in about a $600 gain, considering I have 1,000 shares roughly. However, the biggest percentage gain in my portfolio came from SOFI. SOFI went up roughly 70 cents this week, which for a stock worth $7.65 on my cost basis, that's roughly a 10 to 11% increase, right? 10 to 11% increase. So that's the biggest mover in my position. And a 10% increase in a given week is relatively significant. As we can see, all of my positions are in the negative except for SOFI. SOFI is the only position that I've made money on in the past 3 weeks, right? So we should really discuss, why is SOFI making such a big move? Vici and Monster haven't done very much this week. Their price hasn't moved very much this week. Same with SOFI. SOFI's stock has made a big move despite nothing real happening this week. There's no news on SOFI, right? So let's quickly go into a SOFI report. This is SOFI's stock price this week. The stock price is trading at $8.11 after hours on Robinhood. And if we look at what this means, we've had about a 12% increase just this week. Just in the past week, a 92 cents increase, 12% increase, 12.79% increase this week. Well, this was in stock correction territory, right? A 12% increase in 1 week. Generally speaking, this is on the back of some good news. Generally speaking, we have some good news to back this up. Why? Most investors, generally speaking, like to see some good news, and when they do, they buy up the stock price. So what good news have we received on SOFI? Well, pretty much nothing. The only news for SOFI is that they're releasing an earnings report on Monday, April 29th. So this coming Monday, tomorrow for me. And it's going to release their first quarter financial results before market open on Monday. So a lot of investors are probably really bullish on this market report. Why are they so bullish on this market report? Well, let's take a quick peek at what happened the last time SoFi reported earnings. Previous earnings reports in the last 5 years indicate the company is unprofitable. The company has yet to produce a profit ever until this last quarter, December of 2023, SoFi reported their profitability. 0.04 cents per share profitable. That is a big increase from the quarter before, where they were very unprofitable, and every subsequent quarter where they didn't produce any profits. This is the first time that SoFi is becoming profitable. So let's take a quick peek at what the stock did when they reported profitability. Well, as we can see, the stock reported a 20% gain in 1 day when they reported profitability. They report profitability for the first ever quarter, and boom, stock price goes up 20%. So we can infer that investors investing right here are expecting a similar thing to happen with SoFi stock price. All right, SoFi reported great earnings before. They reported profitability, and the stock went up 20%. All right, they're going to report earnings again. We should all buy right here in anticipation of this amazing earnings report that's definitely going to report profitability. Analyst expectations also expect profitability. They expected an earnings of 1 cent per share and quarterly revenues of $555 million. I don't like this. I think that this is unjustified. We haven't had an earnings report yet. The earnings report hasn't come out yet. There's no guarantee of any profitability. And this 1 cent per share that they're predicting is way less than the 4 cents per share that they reported back here. So even if they report profitability of about 1 cent per share, we're unlikely to see a 20% increase in 1 day, especially since we had a 12% increase in the coming week, right? Let's take a quick look at an example of a situation that happened last week with Tesla to show why this is such a scary thing to see, right? Let's take a quick look at Tesla's earnings report last week. So this is the earnings report right here. Tesla stock price is trading at about $168. If you look at their overall stock price, it's traded pretty sideways. right? We dipped right before this earnings report, and this earnings report came out and it went up, right? We would assume, right, that this earnings report had some good news, right? The stock price immediately rallied after the earnings report, right? So this must have been good news. Well, not really. The stock price actually missed earnings expectations by about 10% on both the top and bottom line. They missed their revenue expectation and they missed their profit expectation. Okay. Well, how come their stock went up so much? This is about an 18% gain in 3 days from this earnings report, right? Well, if we look over here, they dropped by 20% in the week approaching earnings, right? Their stock crashed on roughly no news. There was no news about the company before this earnings report, right? So how come we had such a big drop here? Well, people were expecting horrible news. There were recent layoffs in the company a while back. They reported poor sales numbers earlier. There was reports that the new cheap vehicle that they were coming out with wasn't coming out. So people were really, really worried about Tesla. And they were expecting this specific earnings report right here to be the catalyst to say, yep, Tesla is screwed. Tesla is screwed. Their company is doomed. We're not seeing anything good. But this earnings report came out, and it was mostly in line with the rest of the news. All right. We have poor sales numbers. We have to lay off employees. Obviously, our profits and revenues are down a little bit. Obviously, we're not making as much money, but we're still a company. Elon Musk is still the CEO. Elon Musk is still got plans for the future. Elon Musk is predicting that this robotaxi business is going to be huge. It's going to replace Uber. He's reporting that this new low-cost vehicle, it's coming out sometime next year, and even though it's not the same that it was when they originally thought about it, it's still going to be a low-cost vehicle. Basically, this earnings report said a business as expected. We're not doing as well as we were before, but we're still got plans for the future. And what happens when an earnings report doesn't live up to this big decrease? Well, the stock rebounded. It didn't matter. It didn't matter that the earnings report wasn't bad. It was bad. The earnings report was bad. However, it wasn't negative 20% bad. So what happened was the stock just sort of returned to where it was beforehand. With all the bad news, the earnings report didn't shed any new light, any new bad news, and that was what caused this to rebound. And I'm worried a similar thing might happen with SoFi, right? We see this we see this big run up, right? Up 12% in the week, right? We see a big run up. And what if this earnings report isn't as good as this 12% would suggest, right? Let's take a quick peek at what the expectation is, right? 0.01 cent. The earnings report that caused a 20% increase, right, was a 0.04 cent profit on expectation of no profits. They were expected to post that they weren't making money, and they posted that, hey, we made 4 cents per share for everybody, right? That was a big deal. So the stock went up 20%. Now the expectation is that they're profitable from earnings expectations. However, in order to really have a big of an impact on the stock price as they did last week, they would have to probably report a 0.05 cent profit, right? They'd have to report very profitable. If they come out here and they say, oh, we're 0.015 cents profitable, right? We're profitable, but not by a lot, right? What's going to happen? Well, that's going to be sort of disappointing, I think. I think that's going to be disappointing for the investors who are putting all their money in SoFi right now. And what I think is going to happen is SoFi is going to report good earnings. They're going to report, hey, we're profitable, we're making money, we're going to slightly beat expectations probably. And all these people who bought in this last week, who drove the price up, are going to say, well, we expected a much larger return in a much shorter period of time. We weren't in this because we think the business itself has good long-term longevity, and it's going to continue to grow. We're here because we think this is the catalyst that's going to put this company on the map, right? And when this catalyst doesn't support this 12% increase, it's either going to trade sideways and slightly downwards, like we might see a little bit of like this, goes down like what, 5%, right? And then it just sort of sits around here for a little bit. And it might just trade sideways, right? It might return to a price more in line with its earnings, right? Right now, I think this 12% is overvalued. I think we're going to see a slight pullback. I don't think we're going to see a big pullback. I think this earnings report is going to be good enough to justify at least a little bit of the gains that we just saw. However, I really, really think that we're not going to see a big 20% increase come Monday. We're not going to see, oh my God, SOFI's at $10, SOFI's at 11, SOFI's whatever, right? I think that 20% increase is that previous 20% increase the last quarter is what's actually driving this price. And I think it's emotional, and I think that's wrong. And I think it's going to be a good buying opportunity after this earnings report. Obviously, I'm not saying everyone short SoFi right now. Everyone sell calls against SoFi right before earnings. Their price has already run up. There's no more room to grow. But I am saying that it's much less likely. This has become much more not in line with a good risk and reward value, right? Because a normal risk reward would be 1 unit of risk for 1 unit of reward potentially, right? However, what I think is going on here is any reward you get at this point is minus 12%. So in earnings last time they reported earnings last quarter, there was a surprise that caused the stock price to go up 20%. A similar surprise this quarter, I think, would only cause the stock price to rally 8% because it's already gone up this 12%. And if we have a mediocre earnings, it's going to lose a lot of this 12% that it gained, right? It's not going to see it's going to see a big decrease instead, even though they report good earnings. Similar to how Tesla reported earnings, and it was bad. They reported poor earnings, but it wasn't as bad to justify the big run down it had. Similar here. We have a big run up, and unless this earnings report is absolutely amazing, we're not going to see another big run up right after, right? And I think that's the problem with buying in right now. I think we'll have a good buying opportunity after this earnings report. If the stock drops to like $750, I'll probably put another $1,000 in the company. I'll probably buy a few hundred more shares, bolster up my position a little bit. However, you never know. We might have a really good earnings report. Stock could run up to $10, at which point I would just be holding again. If the stock goes up to $10, I'll probably just hold from there on out. However, I really think this is going to be a good buying opportunity. I'm keeping a close eye on this one, and I'll see you next week with the results and what I decide to do with my SoFi stock. Thank you very much. Have a great rest of your weekend.